Hey, and away we go. What's going on? It's the dividend dive once again, number 146. It's hard to believe. Man, these things just go by so quick and like life, right? Life goes by fast. Hey, it's another Sunday night. What do you guys want to talk about? What do you want to do? I hope you're enjoying your weekend as we wrap it up. Get ready to start another week. The market has been down hard, right? The jobs report was a little bit higher than expected. Could mean inflation is coming, less interest rates, right? But hey, we can't control these things. We can only control what we do with our time and our money and our minds, right? What did the Coolio say? You get your mind on your money and your money on my mind. That's a diacope, I think. I'm not any kind of a literary person. I do read a lot, but or is it a chiasmus? I think it's a chiasmus. I know, right? Hey, welcome to the Dapper Dividends literary hour, where we're going to talk about literary techniques that you may not be familiar with. So, welcome aboard. But yeah, look at all you guys. That's so awesome to have all of you here. And I truly do enjoy sharing this journey and this time with you. And as you know, right off the bat, I'm not a professional, just a regular old dude, just a welder. That's hey, sharing what I'm learning with you. I love learning. And actually in the newsletter today, I don't know if all of you signed up for it and you get it, but yeah, maybe we'll start there. If you want to talk about anything, put it in the comments. We'll do news in a little bit, Steve. Don't worry. I got you. And yeah, we'll start with the newsletter. So, let's say hello to a few more of you people. Oh, the mic. Yeah. So this here is from a place in Chicago, Andersonville, called Transit Tees, and they got a lot of fun, just Chicago things. Chicago, excuse me, if you're not from around here like me. Yeah, we don't all talk like the super fans over there with the Bears and all that, but um, yeah, I guess we do. I'm sorry. Is that my brain is like, you sound like that? Why are you telling him you don't sound like that? So yeah, it's the Schlitz logo. It's how Schlitz used to look, and they just made it into Chicago. But um, that's a good one, Shamir. Hershey and J&J definitely cheaper. I didn't get to read it. I know J&J has had some because I sold them, right? I've been paying attention less to them, but in med tech, I get some med tech information, and I saw that Varipulse, I think, is that their ablation. Um, they're a pulsed ablation, for going into the heart and expanding it, I think, clearing out a lot of the crud that people build up. Isn't that crazy? I was eating and just told my kids that, for the first time in human history, more people will die nowadays from overeating than undereating. I guess it's a good problem to have because my 17-year-old said, well, if I had to choose, I'd rather die from eating too much food. So there we go. Uh, I just want to put myself on there so I can make sure I'm broadcasting to the world. But yeah, so let me share this. This is and Michelle Buck, is it Buck, is stepping down. She's in her 60s. She's retiring. I don't know. I did put out a Blossom post about. It seems interesting that it's 18 months in advance that they announced this, and I think they said they're using some group or some research group to look for their next CEO, which sounds a little scary. Like too many cooks in the kitchen are going to be having their hand in picking the next CEO. But, what do I know? What do I know? So let me show you what I came up with. I just took a minute this weekend and need to make this bigger. This is a little pie chart of our investments that are in the 401k. Let me change this. I always want to make it bigger and give you guys more real estate. Where can't I find my, I lost my mind. I can't find the, I don't know. I can't find where my StreamYard is. Anyway, this could be a problem, but um, yeah. Anyway, so you guys can see this is the fund that. Uh, Let me start this over. I've thrown myself for a loop, right? uh, Individual stocks make up 25.8%, and this is a 401k. My wife's Roth. This is the three portfolios I share in the channel, not the kids' custodials. This is not anything like that. It is just investment accounts. Again, 529. We have money for our kids' college, a good amount, a good chunk, not including any of that. But I tallied up all the funds. So anything that's a mutual fund, an ETF, put that in the funds, and then individual stocks. So I have 25.8%. I'd like to get that to 15%. Let me stop sharing that. Why can I not see my... It's freaking me out. Okay, there we are. Oh, that was weird. It's an SVG. I shared that and I couldn't see I could not see my comments here for you guys. Sorry about that. Very unprofessional, I know. After all these live streams, you think we'd get it down, but oh, yeah, by the way, I'm not a Raiders fan. I thought somebody might ask. This is actually a rookie from the Raiders, my guy Harris. You guys know, one penny at a time. Harris, we talk, and Brock Bowers is a rookie for the Raiders. Helped me win a bunch of money. So I said, if I win, I'm going to buy a Brock Bowers shirt. True to my word, I did. And with today being a lot of football here in the United States going on, put that on. Yeah, I don't know, Alan. Heading in a correction or crash. I guess we're gonna need a catalyst. I don't know. I mean, I'm not smart enough to predict exactly when that's gonna happen, what it's gonna be. But I think, did you guys hear that same statistic that the market has only been up like 20% plus 2 years in a row, two times? And one of them, I believe, was like 98, 99. And then I think the other one was right before. No, that would have been the lost decade. I don't remember when the second one was, but it was only two times and it was right before big market corrections. So, but that's crazy that the market was up this much. So it doesn't look like we're going to be starting the year off with that, right? Yeah, Andrew, who also, I saw your comment, man. You're a Kiwi. I love it. What time is it over there? Man, it's got to be, I don't remember. I have no idea, but we should love the cheap stocks. So getting back to what I was sharing with 25.8% of my stocks being held in individuals and 74% in funds. Man, let me share the newsletter. Well, actually I can just share this. One of the let's do that. Sorry about the sound effects I got popping in your ears there, everybody. One of the things that really changed my mind is, here we go. Let's share this. This is one of the first things that popped up when I do this. Yeah, that's what I wanted to do, like that. Come on. How do I keep losing these? Here we go. So Visual Capitalist, I had shared this. I know, yeah, oh my God. It's how many active funds beat the S&P 500? And they go back to 2001. So it got, what, 23 years of data here? 22 years. And it's not a lot. 2000, and here, I'll zoom in a little bit, but it's probably hard for some of you to see that. 2005, 51% beat. 2007, 55. 2009, 52. That was it. That was it. Active fund managers almost always outperform the S&P 500. And then this was from Fluent in Finance. I had saved this from a year ago. Fluent in Finance account shared how over a 20-year period, 94% of large cap fund managers underperform the S&P 500, which, yeah, that's the benchmark, but there it is. And Warren Buffett, yeah, he said he thinks both large and small investors should stick with low cost index funds. So those were a few things I kind of shared in the newsletter, and I'm going to be selling and consolidating to get my individual stock positions below 15%. because that's going to help me protect myself against myself. I'm not that smart to. I don't know. Some stocks will get lucky on some, but by and large, if these professional fund managers if these professional fund managers have access to Bloomberg terminals, they have access uh, to corporate insiders, CEOs, CFOs, industry experts, and they underperform. Like, what chance do we have? So, it's not throwing in the towel because I still love the individual stocks and having high conviction investments. Some do better than others. Nextstar's really been struggling, ticker NXST, which I did add one more share of this week. But yeah, just to have fun and to give it a go. So at least 10 to 15% will be individual stocks. The rest, it's we only get one go around at life, and I don't know. I don't think I'm that smart, right? I don't know. Does that make sense? Do you guys ever feel that way? I think you're understanding. You're listening to me. Hey, maybe I'm still a bit fuzzy. Took the wife out last night. We went and had hit up a few places in Chicago, which is where I got my sticker from. So shout out to anybody that's listening in Andersonville. I don't know if you're there. It's a neighborhood, and here you go. Here's a live shot, everybody. This is yours truly playing at a bar called Replay. They have a whole mess of old games and pinball. That's yours truly, my wife, taking a picture of me hard at work on burger time. And then they do fun little things. Like, this is the last one, I promise, but they do little pop-ups. They had a Beetlejuice pop-up going on. They just get people to decorate it. So there you go. That's a little bit of what we did last night. So it's good to have those date nights. If you have a significant other, I think you got to spend time out together. I say alone. We were with people, but we have fun. So John, you were talking about that. Don't wish for costs to go down. Your best hope is it splits. Well, yeah, but see, that's the thing. It's more or less the valuation that I'm thinking about. So I'm not thinking that the price is too high, just the valuation. And yeah, I'll show you what I mean. Let's take what do they say? Show me, don't tell me. That's a Rush song. So yeah, for those of you that may be new, when a stock splits, nothing changes with the price. It's just like a pizza that was cut into 8 pieces, now being cut into 16. It's still the exact same pizza, right? Or za. I once knew a guy that said za. I didn't like that. Just never, it rubbed me the wrong way. And when you rub us the wrong way, he remembers, right? So what was I going to show you? Oh yeah, we're going to do Costco. While we're at it, we're 13 minutes in. We'll do news, Steve, and then we'll roll into Costco. And Fast Eddie, I'll say, I haven't bought Palantir. I think it's crazy overvalued. Maybe we'll pull that up. I know it doesn't pay a dividend, but and then be still. I want to get you on this. I want to acknowledge your comment that VTI or VOO and SCHD, we see in factual data. Yeah, we can't beat the market or beat those ETFs, even come close. Yeah, you can on some investments, right? But by and large, over many years in aggregate, and that's the thing. Like, if Visa's outperforming it, I just wouldn't feel comfortable putting a giant amount of money in one individual position. Maybe, Charlie Munger had the balls to do that at times. And from what I've read, my mind's blanking. The guy I always talk about, the cloner, the great cloner, Manish Pabrai. He's done that. There's been times when he's had of his, is it Dondo funds? No. Oh my goodness, I can't remember the name of his fund. Where at times he's had 2 or 3 positions, and that's it. But I don't know. I don't feel. I don't think I could do that. All right, so let's see. I'm gonna show you guys. Yeah, I think after all these live streams, you'd get the hang of it, right? So share screen, and then I don't know. You talk, and at least I can blame it on Sunday night, right? Or Sunday morning. Maybe it's Monday morning. I know some of you are in the future. Oh my God. All right, this is what I did. See, it's like this guy's jabberjawing. So here's the news, Steve. We'll pick up where we left off from last week. LyondellBasell, which, if you don't know, they did file for bankruptcy in '09, came out of bankruptcy, I think, in 2010 or 11. And that's the stock that you can buy now. But yeah, I ended up selling. I think I had, what, 10, 12, 15 shares, and I sold it around 90, I think around 92. Wanted to consolidate. But anyway, they refreshed their outlook on LyondellBasell. We won't go into many of these, like Click and Talk. Smith and Wesson, they downgraded their dividend safety. I do believe, and I'm pretty sure on this, that Smith and Wesson has a variable dividend, meaning that they pay a certain percentage of their earnings. But I think more companies should do that. It would probably prevent. Boy, we like to tongue tie ourselves here, don't we, on the Dapper Dividends live stream? It would probably prevent certain companies, from getting into trouble with the dividend. So, but yeah, founded in 1852. Novo Nordisk, they reaffirmed that safety score of 99, very safe, and it's probably because their dividend is here. Let's see. Will that bring? Yeah, fast dividend growth. Right, they got the GLP-1 drug. I don't remember which one, but yeah, see, fast dividends. But what's the yield? 1.67. Okay, so they grow that dividend very quickly. 52% raise last full year. Okay. But yeah, it's semi-annual every April and August. And I'm just going to guess, yeah, they've come down quite a bit. Holy cow. Actually, that's quite interesting that for Novo Nordisk, what we're looking at, their dividend yield is above the 5-year average and their forward PE is way below the 5-year average. So that's interesting. Oh, and actually their free cash flow payout ratio is a lot higher than I thought it would be. I thought it would be one of those where it's like 20% or something, but there you go. Novo Nordisk, an impromptu look, still buying back shares. Yeah, they've really been helped by those drugs and just crazy high margins. Good for them. And looks like they have no net debt. Here, this is the last thing. I love the interest coverage ratio. I believe this is how much operating income, or EBIT, do you earnings before interest and taxes does a company have to cover every $1 of interest on the debt? So I guess if you would think of it like when you get that paycheck coming in, after you've had to, pay taxes and stuff, when you have interest payments on your debt, how many dollars of earnings do you have to cover every $1 of interest? Novo Nordisk's currently at $825 of operating income to just easily cover every $1 of interest on the debt. So good for them. We were still on the news, weren't we, Steve? Lo siento, mi amigo. I'm sorry, my friend. EPD. I have this too big. Shrink it down, buddy. There you go. Enterprise Products Partners, which is, you guys know, I sold that to buy MLPX, the Global X MLP and Energy Infrastructure ETF, because those dividends are, you don't get a K1 with those, but EPD raised that dividend 1.9%. And I don't know if they're in the S&P 500. If they are, then they are a dividend aristocrat because that's their 25th year. Honeywell, interestingly, is considering breaking up into, let's see, what was it? Sorry about this, but yeah, if any of you invest in Honeywell, you can pause this, but I wanted to see oh, there it is. Duh, right at the top. One centered on aviation and the other on automation. And if anybody wanted to read this little quick blurb, there you go. Just pause the video and read to your heart's content. So Honeywell, that would be interesting. That's kind of been in vogue, right? A lot of companies splitting up, spinning off. Yeah, the fires. I mean, awful. But Mercury's California focus becomes liability as wildfire costs escalates. They downgraded Mercury General. Did I say Mercury? Mercury General. It's just property and casualty insurance company, ticker MCY. So they were downgraded. upgraded was Constellation Energy, ticker CEG, because of the rising demand for nuclear and natural gas. Yeah, it's kind of funny. It makes me think, hey, the thing about solar and wind power is it's intermittent. So yeah, it may be more cost effective, but I don't think it's going to power our modern economies as of yet. And Stag Industrial raised that dividend, microscopic, 0.7%. And then I wanted to talk to you, John, and I'll be back and picking up in the comments in a second. But Costco, yeah, so I would be much more comfortable buying it in the low 600s, and they have an valuation expected, does Simply Safe, of 610 to 745. So it's got a little ways to go, but man, will my eye be on Costco. 99 very safe, and yeah, they just very quick dividend raises. And hey, as the share price keeps falling, we may get it over 1% or so. But there's the valuation, just egregiously overvalued if you ask me. And here, these are the metrics I wanted to show you. So in particular, the forward price to earnings ratio is normally 36.9, which is high, but 51, and it's been as high as almost 60, is nosebleed. So this is one that I think is going to get whacked pretty hard if and when we do have a market crash, correction, whatever you want to call it. And yeah, just one of the healthiest companies I've seen, and I would be happy to buy them. So, and then I don't remember their debt. I don't think they have a lot of debt. Yeah, just awesome. Free cash flow margin's a little weak on Costco. But yeah, no net debt. Just gotta love it. Great company. So let's see what is up with you people there. Hey, he said you people, right? Drink. Cheers if you're drinking on a Sunday night. Maybe you're watching football. You're watching the Bucks and Commanders, right? We get it 3/4 versus a quarter. Yeah. Buyback in PepsiCo. I'm not. It's crazy. Dude, we're flirting with the 130s on PepsiCo, but a lot of headwinds, and actually now it probably is turning into more of a growth stock because the further the share price falls, and that's what we should hope for, right? Is that you have a bigger margin of safety and a much higher total return potential. So in my opinion, when the market falls, anybody that's young or has a lot of investing time ahead of them, you should be applauding and rooting for the market to fall because, I think a lot of people, a lot of younger investors have been unrealistically treated to you just buy and it goes up, and you confuse, how'd that saying go? Don't confuse a bull market for brains or something like that. Was that Burton Malkiel? I don't remember who said that, but Jonathan Glazer. My interview fell through. We're going to try again for this next week. So that's a video, the Realty Income one, I had wanted to do for a while, and I ended up just we'll do it. It wasn't that difficult to make, but it was fun, and it proves a point. You would need almost $394,000 of realty income if you wanted after-tax income to pay for the average apartment, 1 bedroom. But I don't know what you guys are talking about there, so we'll let that go. Yeah, VOO is beating SCHD. It is, and SCHD. Here's the thing, John. I think that. Oh my God, I'm so far behind in the comments. Nutshell answer here. A massive chunk. Is it 35-40% of the Mag 7 make up the S&P 500? So that's VOO, VTI toward the top. If there's a sell-off and those stocks start selling off, and the funds start selling off like VTI, VOO, anything that has SCHG, all these, money's going to start pouring out of those Mag 7 companies. And I think that VOO would fall a lot harder than SCHD. So what's up, man? Good to hear from you again. My thoughts on hated industries. Those can be some of the best returns, right? But you got to get it right. You can't just buy hated industries and expect it to come back. Yeah, offshore drilling. From what I've read, it probably will be a good time for which is why I keep buying MLPX, the midstream companies, the pipeline companies, they're moving the oil, they're moving the natural gas. They're not affected by the price of a barrel of oil. So that's what I think is really cool about those companies is that they got contracts. They just got to move the oil and the natural gas. And yeah, so I guess if we're drilling more and there's more product moving, then they're probably going to make more money. And that is the thing, Bose. You know, you are so right, buddy, that, dude, it's so easy to say when the market's up 23, 24% 2 years in a row, like, oh yeah, if the market crashes 50%, I'd love it. But hey, that's I think you meant the CEO. Yeah, if they step down, well, she is. Oh, you were talking to Shamir. Okay, I'll let you guys go that. I'm getting caught up here, so I'm scanning your comments. Apologies. Wheat and precious metals. Interesting, Shannon. I'd have to look up them, but my thoughts on precious metals are, if, as the price of gold and precious metals go up, they're going to do good, right? Because that means they're going to get more money for what they're pulling out of the earth. So that's what if you guys, for those of you that have been with the channel a long time, you remember when I was buying Barrick Gold, ticker GOLD, great company, but it's so heavily tied to the price of the precious metals. And if they start selling off, those companies usually sell off as well, because then they're not going to get as much. And that's going to, well, I wanted to say crush their margins, but it'll erode their or compress. It'll compress their margins. All right, let's see what you guys are saying. Yeah, I was on Ryan's live stream not too long ago, and they had a ton of trolls, I guess. That is crazy. We don't have to deal with that here. Oh my God, I'm way far back. Dex, you have Burger Time on the NES. Yeah, beautiful. One of my favorite games. Dennis, we're troopers. We're troopers. God bless the wife. We park and walk to a few places, so. Awesome. I just spilled tea on my brand new shirt. Hallelujah. So yeah, good time. Different kind of dividends when you go out with the one you love and you enjoy each other and have some fun, have a couple drinks, and well, unless you can't have a couple drinks, then don't. I don't know your situation. None of this is, I'm going to say none of this is financial advice. None of this is lifestyle advice, right? Starting to look good, Andrew. I wish it was below 300. That's another one of my wishes. Too many wishes in investing around here, right? What do you wish for? Let us know in the comments below, because you know where the comments go. Silly, right? I'm more of an entertainer than an investor, I think, right? Not like I was watching Mark Russane, one of his videos. It's funny. He's like, hello, I'm Mark Russane, CFP, RAA, a couple other acronyms. I'm like, oh, he's got the creds. But do you know what? It doesn't mean he knows what's going to happen any more than you do. He may have an educated guess, but it's still a guess, right? Because as Warren Buffett once said, I always feel like religious. As our Lord and Savior Warren Buffett once said, if accountants were able to predict what was going to happen with stocks and investments, they would be the richest people on the planet, and they are not. So, case in point, they don't know what's going to happen. And Andrew, who is a Kiwi, it is Monday afternoon, so Andrew is in the future. Gun stocks, we were talking about Smith & Wesson. Normal president who doesn't want to ban all guns will lower sales and reduce growth. Probably, right? I think I remember, even though I wasn't individually investing when Obama was elected, everyone thought he was going to take the guns. And I know gun stocks had a nice little pop. Or weapons manufacturers, at least, gun stocks. Bose, you did add Novo. Yeah, very interesting. I've never really looked at the company, so... Gift that keeps on giving. Glad to have you. Welcome to the show. Welcome to the program. I don't think we've talked yet. Oh, Mark, you do it. This is why I love you guys. You always learn something, but I did not know that MLPs are not allowed to be an aristocrat. Who knew? I didn't know. Yeah, that's a good one. I don't know what happened with Prudential. Let me just see. I sold them off to help consolidate other things, and where are they at? 114. Yeah, I think I sold at 120 or something like that. So yeah, you're probably right. All the insurance companies, which I don't have any more individual exposure to insurance companies. Had to think there for a second. I don't. So that's going to be an interesting one. And I did see an article, I didn't read it, about Berkshire probably is going to miss a lot of the wildfire claims. I didn't read how that was. Should have. Would have been nice to say, yeah, I saw this, but I didn't read it and I don't know what it's about. So yeah, I agree with you, man. Costco is just, I can't. I can't. I was telling people, I said, I think I'm going to start a position with one share when it was just over 900. And I just couldn't do it. I couldn't. I'm going to stick to my guns. Granted, I have fund exposure, but I'm going to stick to my guns and wait for Costco to come down to at least below 700, at least below 700 a share, you know. And yeah, again, I just talked about that, Mark, but I should read that article. It was I wonder if I'd be able to pull it up and put it in the chat. Let me see. This could be pretty unprofessional here, but it was a CNBC. I'm looking at my email right now. And oh, look at all you people that responded to the newsletter. I love it. There it is. Let me see here. So they say that, well, what if I can open this up? Let me view in browser. Here we go. I'll share this with you guys. We'll learn together. Saddle up, partner. You like that from the last video? That's one of my all-time favorite movies. Dumb and Dumber, when Lloyd and Harry are picking up the hitchhikers, like the guy that wants to kill them, right? Like, well, I usually don't go. We don't usually don't pick up hitchhikers here, but I'm gonna go with my gut on this one. Saddle up, partner. So, fun movie. If you haven't watched Dumb and Dumber, I highly recommend it. It is a dumb movie, but it reminds me of my younger years. Here we go. We're gonna learn together, and I will. So this is from CNBC's Warren Buffett Watch. So they say that Berkshire is to avoid major insurance losses in the LA wildfires because less than 1% of its premiums are from homeowner policies. So that must be the, total economic losses are forecast between 50 and $60 billion. It's going to be a lot. And yeah, Berkshire is only down 2.7% on the week. I don't know what MCY is. Mercury. Oh, I think they misspelled something. Mercury General. I think that's Mercury. We just talked about it, right? So they're down 26%. Yikes. Well, there you go. This is a rather lengthy article, so I will air. 2015 Berkshire annual meeting. Buffett rejected a newspaper article accusing Clayton of predatory lending. I don't know what that has to do with what we were talking about, but let me copy this and I'll put it in the chat if you guys want to, I don't know, read that article a little bit more in depth. Paste and away we go. So that's in the chat. All right. So there you go. 1%, less than 1% of Berkshire's policies are in homeowners. Homeowner policy. So drinking Pepsi just like every week during a live stream. Hey, I appreciate it, man. And I still do own PepsiCo. That's the beautiful part of when you buy the whole haystack. I still have exposure, just not outright. It's not as exciting. I agree. But you know what is exciting? Having a higher net worth and making more money. That's exciting to me. But it's boring. I get it. ASML, I know, yes. They did talk about them on the last Barron's Streetwise, had some words to share. And I don't remember who he talked about or with, but it was an expert. and he had a lot of things to say. And as I was listening to that interview, I was like, I really don't know a lot. I really don't have a good understanding. And by good understanding of like what ASML does, I pretty much mean I know nothing about what they do. So yeah, you're right, man. Historically, beer, tobacco, entertainment, value stores, etc., do well. Also, like beauty products, people still buy beauty products. Um, Relationship things, people still want to have relationships, even if it's a bad market and it's a crash, right? People want to relax. They'll cut other things, which I guess is the whole consumer discretionary thing, is meaning that people are going to decide what they want to cut and not. Oh, Frank, what's up, man? Yeah, thanks for the comment earlier. It's just so crazy how back I get on these. Ryan, what's going on, man? It's been a minute since we've talked. Dude, I've been so freaking busy. One daughter in volleyball, one daughter in bowling. She had 3 matches last week, 2 matches this week. We're split up this weekend. My 17-year-old has a tournament in Milwaukee this weekend, and my other one has a tournament this weekend for bowling. So I'm going to be with the bowler watching bowling. It's pretty cool, man. I get into it. And I start rooting for like other girls, or again, like the other team. Like they'll throw a gutter ball and they'll look all disappointed. And I'm like, that's too bad. I'm like, shh. I tell my wife, I'm like, is that wrong? I'm like, this poor 17 or 16-year-old girl got a gutter ball and I'm all like happy about it. So not happy, just it makes it easier on my daughter's team, All right, enough of that. Sin stocks, perhaps snacks. Yeah, probably. Thanks for the assist, Ryan. Yep. Tell us what you're going to buy. I think I asked it before. What do they say about that guy, Russ? Like, what is it with that guy? All he does is talk. Marcus, thanks, man. How's it going, Marcus? Good for you? Receive $100 or a Bitcoin, what would you choose? Well, right now I would choose a Bitcoin because it's worth, 90,000 plus. But that, I know what you're doing there. They did an experiment, like a man on the street thing, and they asked people, I think, would they rather take, I don't know. I think it was like a certain amount of gold, maybe like a gold eagle, or I don't know, $100 bill, something like that. And people would choose the $100 bill because nobody knew what the price of gold was. Yeah, 10K in a Costco and Netflix 10 years ago. I wish we can run the math. We can always look and cherry pick, but the fun thing is that right now today, as we're recording this, there's another Costco and Netflix that 10 years ago you're going to say, could you imagine if you but that's the thing. It doesn't always look like a slam dunk, but now we look back and we're like, yeah, why weren't we investing in Costco? The midstream ETF I bought it's just one of the best from what I've seen. Yeah, expense ratio I think is like 0.34%. 0.34. I think it's 34 basis points, I believe, on ML. Let me see. Oh, we won't look right now, but it just has them all. It was the easy button, and the dividends, there's no K1, right? So, because I think they're distributions. So the ETF so the way that MLPs work, limited partnerships, why I always joke around and say you're the partner, is because it's a tax advantaged entity, meaning that they're passing through, from how I understand it, and correct me if I'm wrong, they pass through their earnings to the unit holders, right? They're not shareholders, they're unit holders, and you receive distributions. So you have to pay the taxes on that, which is why dividends are double taxed, right? Once at the corporate level, and then again when you receive the dividends. So at least that way, it's a little more tax advantaged. And actually, I take that back. With MLPs, you pay the taxes when you either sell them or your cost basis hits zero. And when your cost basis hits zero from receiving dividends, then you start paying ordinary income on that. But I guess if you just keep buying and stepping it up, your cost basis. And speaking of step up, with MLPs like Enterprise Products Partners, you can bequeath that, right? How's a fancy word, to your heirs. and they get the stepped up cost basis. So if you bought EPD at $20 a share and you have a cost basis of 10, you die, you pass it to them, and it's $30 a share. Well, now their cost basis is $30 and the clock starts ticking all over again. Yeah, whiskey wishes for world peace and McDonald's using beef tallow again. That's a fun one. My brother-in-law just made brownies using beef tallow. I don't really eat sweets, so I don't know how they were. Michael, what's up, Michael Buckner? Thinks that, well, you're not related to JJ Buckner, are you? I can't tell in that avatar. You don't look related to him, so I'm gonna guess not. But you think Lamb Research looks great. You don't have enough cash to buy them all. No, you don't. And that's kind of the where I didn't want to go and why I'm going to be. You're going to see me starting to sell off positions. Like I have 10 shares of McDonald's, right? But it feels sentimental. I was just reading in Poor Charlie's Almanac, the endowment effect is a real thing. When we own something, we place a higher value on it than as if we didn't own it, and it complicates things. And that goes with everything. So just because you own it, you think it's worth more. And those shares of McDonald's, I have a 160s or 70s cost basis on those 10 shares. I've done well with them, but I haven't added. I have no plans to add. So it's like, what am I doing? Just going to hold those 10 little shares? And honestly, I think Chris Kempczynski is the CEO. That's all I know. I have not looked at the company in a long time. But I guess that's a good thing, getting those businesses that you don't have to. So, yeah, I want to have fewer companies that I know a lot about and I follow them a lot closer than having 20, 30, 40 or more companies. So, all right, this is what you guys are buying. Andrew's looking to buy more Visa. Nice. Mondelez, Prologis. That's in my wheelhouse. I really do like Prologis. PepsiCo, American Tower, and Vici. AMT's, no, what was that other one? There was one that I heard on Invest Talk that they brought up some good points. Crown Castle, that was it. CCI. It's that they think there's a dividend cut coming for Crown Castle. And maybe once I get caught up here, we can look because, Jesus, criminy. I just want to say, I know you guys I'm way behind in the chat, but I love talking with all of you. And my gut instinct is every single comment to just spend 5 minutes on, but I can't do that. So, yeah, high tech, I didn't get to 100 yet of Nike. I think I'm at 76 maybe. Yeah, Frank, I know you were looking at Next Era Energy. Nice. ConocoPhillips, Shannon, that's COP. Who was buying COP? Kevin, right? Kevin Burgess was going to be buying that. REIT's looking great. Yeah, I think they're just going to keep dropping. I don't know when they're going to come up, but I don't think they're in any danger. I'm waiting kind of stubbornly for Agree Realty to get to below 65. I almost added one more. So, dude, my guy. If you're just joining in, Dresh is referencing this. I'll put it up one more time. Last night, my wife and I had a date night, and there's in Chicago in Lincoln Park, there's a bar called Replay. And from what I understand, talking with the owner, interview I heard with the owner, he was talking about how that they have, I would say they probably have 40 or maybe 40 video games and probably a dozen pinball machines. And they do fun pop-up events like you'll see in a second here. But I know this has nothing to do with investing other than this is a life thing that I'm sharing with you guys is here. So there's me playing Burger Time, one of my all-time favorite games from a kid. And this is one of the original cases that's from the 80s. And yeah, of course, my wife being a goof and taking that picture. But, back to the owner. All the games are free. You don't pay for any game because if you did, he would have to pay an amusement tax to the city of Chicago. So kind of builds it in with a little bit higher priced drinks, but you play all the games you want and you don't have to pay anything. And then I saw Bob because they had a Beetlejuice pop up. So that's yours truly with Bob. So glad to know. I like Dig Dug too, Dresh. Good stuff. Yeah, good. Always busy. dude, I know, man. It's, you know, in this is our busy season, so I worked Friday night. How about that? I finished editing my video. I was gonna watch a movie, and we had an emergency call. I had to drive, 45 minutes to Chicago. Company called Pickens Kane. They're a moving company. Um, they had a door. They couldn't lock the building up. It was snowing. Anyway, I didn't get home till almost midnight, but that's the way it goes, you know? You need that money. So, all right, I'm almost caught up to you guys. So I apologize if anybody asked anything of importance, and uh, he's there. Yeah, Harris is there. Maybe I'll bring him on live one time. Maybe I'll do that. Maybe I'll see if he'll come on live soon. But he's all right. He's doing his thing. Kind of took a break, and you know what? That's one thing I worry about is stopping, because I was actually just thinking about how I'd like to read more and research more, but my time is limited, and I do as much as I can. And it's been a godsend, podcasts and earnings calls that I can listen to, because I have a lot of time to listen to things. So, what was the point of that going to be? Come on, tell me. The point was going to be, I don't want to back off making content. The live stream here, this is so easy and fun. I really look forward to this. But, sometimes the editing on the videos can get tedious, but I'll find a way to still have really good information, and, maybe dial down some of the over editing to make it go quicker. But anyway, so, oh, that's fun texting with Harris right now. Yeah, I actually I text with him every week. So he's doing good, man. He's, like I said, just figuring things in his life out. And I don't know, if he wanted to come on for a little bit, he could. He could. I love that. Yeah, never fall in love with a company or stock, and that's the thing I'm fighting against now too, because with ExxonMobil, I'm up, with not including dividends, I'm up 136%, but it's on 29 shares, and I haven't added any shares since 2020. Uh, I don't know. I keep thinking, like, it's what am I holding those for? What's their purpose? It's fun. It's kind of like yield porn, strokes your ego. Then you get to see, like, look at that, up 136%. So that one I may hold just to always see what it does, and maybe one day get the money back. But Chevron, I'm close to 100% up on Chevron. I might just sell it, 15 shares. But yeah, that's just a great point, man. And it's so hard, and we get that endowment effect going, and we do fall in love with it. James, you're buying CNR. Is that Canadian National Railroad? It's not coming up. What is CNR? I don't know if you're Canadian and that's the Canadian ticker. Lisa, no worries. Always giving you the good salute. What's going on? We were talking about Burger Time and Dig Dug not too long ago. Yeah, and guys, do you guys listen to my podcast? That's one that I'm doing like twice a month now. So I've oh, see you later, dude. I just keep saluting everybody. Yeah. Look at this guy supporting the Chipotle. Gotta love that. This is easy for me. Sunday nights are usually quieter, especially when school is going on. So we're home. Summer times can be a little bit, when the kids don't have school, we might be doing something. But oh, let me show you guys what I bought. How about that? Because you reminded me with more Vici or ADC yourself, and I'm caught up with you guys. Yeah, Whiskey Tango. Dude, if O dips into the 40s, I'm gonna be buying more there for sure. Oh, CNI. Okay. CNI is a Canadian? Yeah, Canadian National Railway. Dividend safety score of 9. Yeah, let me show that. And then yeah, since I'm caught up, James. I want to make sure I got your name right, man. So, all right, James. All right, so that's that. Here we go. Canadian National Railway. Why did you do that voice? I don't know. Down below $100. Yeah, that's interesting. So I'd like to know why they have fallen so hard. Founded in 1919, same year that my grandma was born. She's no longer with us. She'd be very old if she was. Well, she is still with us. She's just no longer alive, right? Even if you're cremated and you're still here, just in a different form, I guess. So you don't really go away. You're just not alive. Uh, anyway, it's a little too deep and philosophical for the end of the show on a Sunday night. Very nice dividend growth, although the last one was average, 27 years. Yeah, they're Canadian. What are they paying? $2.45. Isn't that a loony? 2 loonies? They're hitting you with 2 loonies a year. No, it's a toonie. The loony is a 1 and the toonie is a 2. That's right. Looks like they're undervalued. So that's cool. Yeah, look at that. Dividend yield is basically 2.5%, and the average is 1.9. So in the PE, all right, looking like it's at a good buy level. Although the free cash flow payout ratio has been creeping up. So there's just a very quick look here, man. I'm just breezing through this. It's interesting. Free cash flow per share in 2021 topped out, and it's been eroding. I wonder why that is. Definitely something we would need to look into if we were going to individually invest in this. I think 639 million shares outstanding, so they keep buying back shares. Yeah, really, really outstanding margins. And net debt, a little bit high. It's not as high as Nexstar, which is could be the one thing I've missed and underestimated there. And I'm going to show you guys what I bought. Here we go. So yeah, we talked about this already with, I was sharing a few of the things that got me thinking, especially Fluent in finances. That looks blurry, but anyway. And then I shared a link. I hid the market values of everything that we do own in our investment accounts. Again, not kids' college, 529s, nothing like that. So I'm going to be chopping down some of those individual holdings. But yeah, dividends look at that. I got the last PepsiCo dividend. It was a little bittersweet. It hit the account. I was like, $135.50 from PepsiCo. That's my last dividend from PepsiCo. So, and then $118.94 from Vici, which I did roll right back into 3 more shares of Vici at $28.18. 6 more shares of Nike at $71.70. That's almost at a 52-week low. 2 more shares of Realty Income at $51.95. Another Nexstar at $149.95. And then, of course, as soon as I bought there, it promptly dropped to like $147 and change. And 5 more SCHD at $26.95. So those were what I bought this week in the dividends. Just the Dapper Dividend podcast. Yeah, it's on iTunes, Spotify, just all the podcatchers. Just put in Dapper Dividends and you'll see the skull guy. So, because it's too much. Like I want to create so much, but and I'm not gonna knock those that take their YouTube audio and just put it on the podcast. I like to do something unique, at least speaking something different that's only going to be on the podcast. So I really do need to set aside an hour for it. There's no reason I shouldn't be able to do that, because some of you have said that it's much easier to listen to a podcast, and some of you don't, I guess, watch YouTube that much. But you're here on YouTube watching me now, so. What did you pay per share on ExxonMobil? Let's look. The conservatives in Canada with their huge economic growth. That could be, man. It could be a really good time. James, we may look back and say we should have bought hand over fist with that. Paulo, I haven't really looked into LyondellBasell, but they starting at OnlyFans, yeah. They're commodity driven. They are tied to, from what I know, the price of oil and natural gas. When those feedstocks go up, that affects their profit margins. When they're low, that helps them out. So And that's one of the reasons I sold them, is because they're, from what I understand, really tied to the commodities, especially oil and natural gas, the petrochemicals, right? That's what's I think it was like olefins and polyolefins or something like that are some of their main products. So they yeah, I love it, man. So I'm gonna guess it's something to do with that, right? The price of a barrel of oil has been coming down. I haven't checked it. I hear it every week. It goes in one ear, right out the other, because it doesn't affect me. I'm still gonna buy gas. I have to. We have to drive our car. So, um, yeah. First on the chopping block, probably McDonald's. I'm thinking. Here, let me show you. Let's. Matt, you asked for my cost basis on X on mobile. Mobile. All right. Let's see. Go portfolios. My portfolio. So this, zoom out. There's going to be a lot of stuff at you. This is Simply Safe Dividends, which, by the way, you can try free for 2 weeks. All you have to do is give your email address, simplysafedividends.com. No credit cards, no anything. But let's see, we wanted Exxon. Yeah, the ones I'm pretty much going, like AbbVie is really heavily well represented right now in SCHD. Obviously, things can change. And that's been one of the knocks on SCHD. A lot of people don't like that when a company starts really performing well, that they, sorry, let me get myself out of here. I'm blocking some information that you guys might want to look at. Let me do that. There we go. But anyway, AbbVie, probably going to go. Chevron, I might do that one this week. So I had a cost basis of 84. I'm only up 80%, 81%, not including dividends on Chevron, but a little bit of redundancy, I guess, in they're in the same account with ExxonMobil, but innovative industrial properties, those last 10 shares, I missed the boat. I should have sold those in the 130s. Didn't, but just for more clarity, I may move. Yeah, Jesus, almost a 12% dividend yield on Lockheed. That one I might. Tempted to. Probably will do it. 38% up on those. And again, this is just to streamline, to give me more clarity, not have to take up more mental bandwidth. But some of those I'm going to think more and longer and harder about. Yeah, McDonald's, I mean, what, they're kicking me. It's 1% of the income. And where's the dividend? Where are you? Annual income, yeah, from McDonald's. So I mean, $70, So I'll probably consolidate that. But you want ExxonMobil. Sorry, Matt. Here you go, right down here, right above you. Yeah, I think I'll be getting rid of. Again, nothing wrong with the business, but that was an exploratory position. Spent a while looking into it, and yeah, I know Ryan's still gonna own those, but hey, that's what's the beautiful thing. We all do what we anyway. Matt, here you go. ExxonMobil. My average cost is $45.16, so I'm up 136% on those shares of ExxonMobil. So yeah, I'll probably. Oh, dude, that's Jay, man, that's way too much, dude. You know what, man? I get in contact with me. I'll send you something. Russ at DapperDividends.com, dude. I feel like refunding you that money back. I did invest that for yourself, buddy. I'm gonna give you that money back. I mean, oh, I don't send me, Bob. Anyway, email me. I want to do something for that. That is just too much, dude. Yeah, there's somebody that needs that way more than I do. Somebody needs that way more than I do. Trust me. Your account probably needs that way more than I do. Yeah, you guys keep me motivated too. Yeah, seriously, Jay. Russ at DapperDividends.com. Email me. We'll talk a little bit more now, because I appreciate that. I appreciate that. So, I mean, all I can say is just thank you. Thank you. And I don't know. We'll talk. We'll talk if you want to email me, if you feel comfortable about doing that. So, did I say that? Craig, by the way, nice congrats to those Philly Eagles. But yeah, dude, that just makes me feel uncomfortable seeing this. I mean, I'm just a welder. I'm just a dude doing some stuff, making mistakes, sharing them, doing some things right, some things wrong. So I don't know. Let me think about this, but I hope you email me. Matt, I think I'm going to hold on to ExxonMobil because when I looked again and I saw that $45, I don't know what's going on with the voice here now. Oh my God, we're time anyway. When I saw that $45, I should probably figure out how much I've gotten in dividends, but I can see that being my first position. Energy Transfer was close, but I can see maybe in another 10 years that those Exxon shares will have paid for themselves and they'll be free. They'll be my first one. So, um, yeah, a couple more here. Let's see. Thoughts on the future of PepsiCo? Manel. I sold it. Yeah, I sold it. You said it right there. I think they'll be okay. I don't think they're going anywhere, but I wouldn't expect any rapid growth. But the cheaper the stock price gets, the higher the upside potential, right? So I think it's just fine. I just wouldn't get my hopes and expectations up. Let me look at one thing for you, though. Dude, that 50 is too crazy. You guys should be using, somebody knows. You got a kid, somebody. Just tell me that you were either going to like spend it on crack cocaine or something or give it to me and then I'll feel better because, holy Christ, look at that. PepsiCo pushing a 4% yield. Let me see a few things here. Manel. Yeah, just okay. Average dividend growth as of late. Dividend king, of course. And they will probably be raising it in the spring one more time. Yeah, it's probably undervalued. I don't I don't know if I agree with that. They expect a price of 182 to 223. So let's see. His throat. Look at that. Just nosebleed level above its historical norm for the dividend yield. Yeah, it's gotten whacked hard. I mean, there's a lot of headwinds against it. This is an issue. And one of the things, and you guys know we did lives on it, we did videos, and back in 2022 when it popped over 111%, that worried me. And I said these big blue chip companies can sustain a payout ratio for a few years like Coca-Cola did. Back in the teens, it was over 100%. The free cash flow payout ratio is just, yeah, 80s are too high. It should be under 70%. So they expect it to come down, but will it? This is too much. That 116%, too much. Not comfortable with that at all. Yeah, and free cash flow per share dropped. So I guess it's justified that they're getting whacked. Sales growth is 0% last 12 months. They're hitting it. They're getting some headwinds here. So I don't know. Maybe they spin off Frito-Lay's eventually. They slowed down the share buybacks to a crawl. So that's concerning. They're probably, a lot of stock options going on there. But yeah, I mean, their margins are still okay, except free cash flow margin is compressed quite a bit, eroded a lot. Their debt's come down a little bit, but it's lost some of its luster. It's lost some of its luster, Manel. So, all righty, well, guys, I know if you watch, just do something else. Don't send it to me. Don't send it to me. It makes me uncomfortable. I don't need it. I mean, yeah. And then we'll end with that. I great talk on it. I mean, it's the GLP-1 drugs. RFK wants to make America healthy again. One of the big things I shared that on Blast. I think I shared it on YouTube too, on a post, is that there's some momentum in the U.S. government to prohibit SNAP food stamps, from being spent on junk food. And I happen to agree with that. I don't think that I don't think people that can't feed themselves and their families should not be able to buy soda and cakes and, Hostess and junk food. And no, it should just be the healthy, protein rich foods that you need while you're in a tough patch to get going. Like, you don't need to buy junk food. So, um, that is another headwind. There's a lot of headwinds. The price of cocoa being high. So I mean, we could probably spend 10 minutes talking about the 4 or 5 headwinds that are facing PepsiCo and a lot of the other companies like Mondelez, Hershey's, like that. But you know, yeah, I'm glad you agree. And it's I don't they don't break it out as to how much was spent on junk food from food stamps, but just the fact that it is not good. That's not good. So, all right, I'm way over here. So the 74 of you that have been hanging strong, dude, that's awesome. Jay, once again, man. I mean, just dude, shoot me an email. We'll figure something out. But way to go, making me way to go. Wait, oh, drafting those categories. I don't know what you mean, Michael. That's confused me on that one. But anyway, that's it. That's another one. So 74 of you. Hey, that was my whole number on the John C. Stennis 74. Good number. I love it. I love you guys, and I'll be here again. We'll do it again next week. And what do we talk about? I don't know. Something. We'll have some fun, some laughs. And as always, dude, thanks. For those of you that are also kids of the 80s, enjoy my outro because I sure do. And the music may be a little bit sad, but I'll be back to talk with you again next week. And hey, let's see what we got going on in the market. So long, everybody.